Hello, everyone. This is Dan Gramza, and welcome to Gramza Market Studies for Monday, August 26th. What happened with that NASDAQ market? I was looking for unchanged to higher as we went into the weekend. That's what we discussed on Friday or Thursday for Friday's session, and we did get that kind of behavior. Even though we had some negative news out there overall, we had that kind of a confident close for the week, the right kind of behavior, and I'm looking for a continuation to the upside next week. When it comes to the euro, this is also a market that I expected more strength from. The next 3 days next week are going to be very important for the completion of this pattern that's setting up here for that market. And I feel the same way when it comes to these interest rate markets. Let's take a look at those. I'm not looking for, again, dramatic follow through here in the euro. That looks just fine, but I'm not looking for this to be sustainable when it comes to the 10-year notes. Now, this market did trade above that bullish level. The difference between the bearish and bullish level in this market, to give you an idea, is 62 ticks. Each tick in this market is $31.25. And so the dollar value of this change would be $759.50. And again, that's just a reference to give you an idea of that change. Now, if we look over here in the bonds, this is 118 ticks between that bearish level and bullish level here. And that would be, again, times $31.25. So that would be $3,805.50. And again, it's just a reference to give you a feel for what is the dollar change when you and I look at these charts. So for the bonds, that's what it would be per contract. But I am not looking for this market to be sustainable to the upside. Something has to give here. But let's move on. In the gold market, we are seeing continuation to the upside. As I mentioned before, I was looking for a neutral day with the bias for a move to the upside. This is logical to me, and I'm looking for a rest day on Monday, not a dramatic day for that market. Also, crude oil did firm up. It did trade up above this bullish level. Now, in this market, the difference between that bearish level and bullish level here is $650. That would be the magnitude change that you're looking at here. And again, I'm not looking for a dramatic move back to the upside in this particular market. But let's move on and let's take a look. See, this market could get dragged higher. It's not really a market moving on its own. That's the way I feel about it. But let's move on. Soybeans. We have felt the bias again for soybeans was for a move to the upside. We saw that action on Friday with that stronger close. So the buyers are still present. We're not looking for a dramatic move on Monday. Well, that concludes today's market studies. Thank you for being with me. Looking forward to being with you again. Oh, I forgot to tell you about corn. Corn did trade below this bearish level. And the difference between the bearish level and bullish level here is for corn was 10 cents. Now, this market trades in quarter-cent increments. And each quarter cent is $12.50 per tick. So that's $50 a penny, and in this case it's 10 pennies or 10 cents. That would be a $500 per contract move. That is what that magnitude would represent. Alrighty. Well, that concludes today's market studies. Thank you for taking some time with me. I'm looking forward to being with you again, and in the meantime, take care.